Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
It's always important to have worse weather in Milwaukee.
Yep.
We do that now. Dan Miletti of Allspring Global Investments, head of equity, where winter is really winter. And I really want to talk about the future of value investing. I know Allspring is a venerable, I think of John Kerry at Pioneer, or I mentioned John Templeton earlier with his measurement of the Templeton Global Growth Fund years ago. What's the future look like of value investing for Ann Miletti as you shift to the ETF world?
It's a great question, Tom. Thanks for having me on, and Merry Christmas to you and Paul. Look, I think that I like underdogs, not just the Green Bay Packers. I also like small and mid cap here. And I think when we look toward the future, that's where I really see the most value. Certainly those indexes have more financials in them and more, cyclical names, but they also have some very profitable companies that have been kind of just ignored by the rest of the market as this Mag 7 area has really taken off. I
mentioned John Kerry, and back at Pioneer of Boston to the Phil Carret era, you'd have a value fund with 100, 150, dare I say 200 stocks. Are you less diversified now in trying to succeed at value versus owning 4 growth stocks?
Yeah, I think we're focused on trying to get investors to think more about diversification. Now, we still are really cautious. You don't want to be everywhere in this market, but there are some really high quality companies out there. And one of the things, I followed small and mid cap stocks for most of my career, which is dating me much longer than I want right now. But what people often associate with small cap companies with is that they're unprofitable. But there's a lot of small and mid cap companies that are quite profitable. And when you look at the earnings multiples of those companies versus the S&P 500, they are almost at trough levels. And so it's those types of companies, Tom, cash flow positive, in many cases, earnings positives, really good management teams operating these companies, but just can't get out of their own way. So diversification, but looking for high quality still.
And I know you and your teams at Allspring, you do a lot of real bottoms up research analysis. Are there sectors that screen well for you guys in that small to mid cap world?
There definitely are, Paul, and we have seen financials start to outperform. That is one of the areas that our managers were highlighting earlier. Certainly with rates coming down, other pressures coming off that area, and not just the banks, but more broadly other financials as well. But I would also say healthcare, and this is an area that a lot of the market has been kind of scared away from, but the tools and diagnostic space in particular is an area that has been underutilized, where you see earnings expected to really ramp in 25 and 26. And so where you see that earnings acceleration, that can actually bring really good returns for shareholders as well.
We get lucky, as we did yesterday with Dana Telsey on Nordstrom's going private. We have Ann Miletti with us from Allspring and Strong in Milwaukee. And this is Joshua Franklin in the Financial Times pretty much moments ago. This was rumored, and now the FT reports the U.S. Banking Lobby Group has said they filed a lawsuit against the Fed over the central bank's stress testing. And of course, the quote here from Greg Baer, "We appreciate the board's announcement as a first step towards transparency." Are we beyond stress tests, Ann Miletti? When you look, I get JP Morgan's wonderful, but come on. If you look at the top 20 banks after what we went through 18 months ago, can we really get beyond stress tests? That's a mouthful. Stress tests of our banking lobby?
Tom, this is a really interesting article and a comment as well. as you know, where have we seen concentration grow? It's with banks. And there may be more risk out there longer term than less. But I think others would point to private credit and private equity soaking up some of the slack on the other ends, and those areas also funding many businesses. But I don't know. We'll have to see what happens with that lawsuit.
Hey, and a lot of folks with the new Trump administration coming in are expecting M&A to really pick up. Is that something you guys thematically think about for 2025 and maybe beyond?
Absolutely. I think we're already starting to see it. You know, the IPO market is starting to show signs of opening up, but I think M&A is real. There, you know, as you both know, company balance sheets are strong. There's a lot of cash on the sidelines when it comes to what companies have been kind of holding out, waiting to see what the future looks like with a lower regulatory environment, with rates continuing to come down, maybe not as low as people expected. That's a good environment for M&A. It's another reason we like that small and mid cap space. You know, these names are kind of ripe and valuations are attractive. And so I think M&A will heat up. It will be a theme into 25.
You know, Paul Sweeney, we mentioned Ben Laidler in Christmas Eve 2018 with his great bull market call at the time at HSBC. I think I set it up 154%. I can't remember the number, folks, but I got JP Morgan from that same holiday season 6 years ago. Fortress Diamond is up 161%. 17% per year.
Solid.
I thought banks made nominal GDP and you went home.
No,
wow.
Great returns. And they're building a phenomenal headquarters on Park Avenue, which I can't wait to see. Hey, and one of the things I'm trying to figure out where the performance in 2025 could come from after two just stellar years of north of 20% returns. I feel like it's got to be driven by earnings. And sure enough, you know, the earnings growth out there is 12 to 14%. But boy, that seems pretty high. Is there earnings risk out there for you guys? Are you thinking about that?
Paul, I agree with you. It seems high. I would have probably said that coming into last year, or this past year, but we didn't see tremendous earnings growth outside of, you know, a real concentrated number of names. This year, I think we need to see real earnings growth in order to get the market to accelerate. But you know, the equity market will continue to surprise. I looked at some data going back to 1926, so 99 years. 71 of those years, if we can count this year, which hopefully we can, have produced positive returns, 71 of 96 years. And 32 of those years have produced returns of over 20%. 5 years in a row of 20% earnings. Paul, you will remember this. This was in the fun times of TMT for both of us. 95, 96, 97, 98, and 99 were all plus 20%. So, you know, you'll never know. Maybe we can get 3 this time around.
And Miletti, is Apple a value stock?
You know, Tom, the way I love to think about this is value is what you gain, not what you pay. And so I think it all depends on what you paid for Apple and how much more gain we can get. I'm going to use the old Buffett phrase for that one.
Didn't you mention, Paul, like this year, I need to buy my
Apple's
first share.
Up 33%, Tom.
33% this year? I thought they were doing terrible. It's like, Tim Cook, you know, it's terrible. Stop the road show. Remember the developer shows?
Yeah, they still have them. They're still big events.
So is this like a home run for Dan Ives?
He's had a lot of home runs this year. He can be sitting back with his ugly clothing that he tends to wear, or loud clothing that he tends to wear.
Oh, listen,
it works for him. I know. I'm all over him on that. But he's a Penn State fan, so we forgive him. Okay. So there you go.
And Miletti on value. Let us continue. A couple more questions here. We're on television and radio worldwide. And Miletti, I go back to value, and on an international basis, the number one failure has been strong dollar, resilient dollar, international stocks. At some point, it's going to be a moonshot. When is that?
You know, Tom, I think if we had to pick a dark horse going into 25 and 26, we'd probably take a shot at having some allocation toward emerging markets. And it's exactly, you know, what you're pointing out. The dollar has been so strong. It's really pushed back emerging markets, you know, on top of other things. But, you know, I think there is real value to be had when you look at the MSCI EM and index versus the S&P 500. We're at a 20-year trough. And so any kind of positive surprise or weakness in the dollar could really cause that area of the market to surge.
Okay, Miletti, thank you so much. Have a wonderful season. Merry Christmas to you. Miletti is at Allspring in Milwaukee.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us now, someone who's tried many agnes, Stuart Kaiser, joins us. Again, American Airlines down 4% as well. Thank you so much for joining us in studio on Christmas Eve. Really appreciate it.
Yeah, good morning.
The number one thing we got wrong was growthiness. You had the advantage of Andrew Hollenhorst saying we will have growthiness, we will have higher rates. Does the growthiness continue and make your life in equity markets better?
I certainly hope so. The Fed seems to think so too, which I think was a friendly reminder from the SEP that it wasn't all about inflation risk, that they also think the unemployment rate is going to calm down and growth is going to remain solid. But to be honest with you, I think that's the biggest risk early next year with that unemployment report on January 10th. We're going to get a very quick test of whether the Fed's view of flattening out of unemployment is the case or not. If we do get it, then look, I think equity markets are in good shape. If we get an inflection point higher, it's going to be a tough start to the year, I think.
So what is the 2025 call here? We had 2023, 2024, 20% plus gains in each of those years. How often do we get a third year of performance after that?
I've seen people say it's only happened once, so
okay.
That doesn't mean it can't happen again. But look, I think the issue is you have about, call it 14 to 15% EPS growth price for next year, which is a pretty solid number.
Yeah, that seems almost aggressive to me, but
yeah, you're going to need to see a broadening out, I think, for that to happen. You've got valuation that's obviously quite extended. So I think if you take those two things together, you're going to say, yes, I might have another double-digit year, but the risk reward around that forecast is really, really tricky here going into 2025.
What are some of the sectors? How are you playing it, either from a sector perspective, a factor perspective? Are we looking for a broadening out of performance in 2025?
Look, I think sector-wise, the area where we've seen the most consistent sponsorship is in financials and banks. So that seems to be the easier trade. Obviously tech, you need to be in tech. Then you've got things like healthcare and energy, which I think have a lot more moving parts and are a lot more tricky, and you need to be nuanced about it. From a factor perspective, if you believe the Fed's forecast, which is kind of a higher for longer profile, what did well in the first half of 2024 when we traded higher for longer? It was large cap, it was tech, and it was growth. So I think that has to be your base case to start the year. And to get the broadening, you're going to need to see that in earnings like we did back in the third quarter.
My tweet of the day here, everybody's working on Christmas Eve. They're all at home having their Kirkland eggnog with a 29 proof, according to Lisa Mateo's reporting. Lawrence McDonald, who had my essay 2 years ago, walking through the wall of money that's out there, the 6 trillion, whatever the number is, I can't remember. He lists over the last 10 years, the 30-year bond. 2.7, midpoint 2.3, down COVID 1.9, and we're back out to like a 4.8% in the 30-year bond. Have you been surprised we've had this great bull market with a migration up in yield?
Yeah, we have been a little bit, and I do think the term premium, particularly that 30-year point in the yield curve.
Define that for people like Lisa Mateo having their third Kirkland eggnog. What in God's name is term premium?
So term premium, just how steep the bond term structure is. So in this case, a steepening of the term structure, in our view, would mean the 30-year yield is rising substantially. I think if that happens, it's a significant risk for U.S. equity markets. And the reason is this: we could talk about the 10-year yield, which you mentioned at 4.6%. We could come up with a good reason the 10-year yield might go to 5 or 5.5 if we got a very positive growth impulse. It's very hard to come up with a positive reason the 30-year yield would really move higher. So that is probably going to come from inflation and deficit spending and things of that nature. So if there's a part of the yield curve that we are concerned about, it would definitely be really at the very long end of things.
What are your clients telling you about this new Trump administration coming in later in January? Are they positioning around that? Are they treating it as a non-event? Are they becoming more bullish on the margin? What are you hearing from your clients?
I would say definitely not treating it as a non-event.
Okay.
I would say if you think of the election, you had a sentiment response early.
Yep.
Then you had a response to kind of policy proposals. Next year is implementation. And the implementation part, I think, carries a lot of risk to it, right? It's easy to talk about tariffs, but now let's implement tariffs. It's easy to talk about, reining in government spending. We saw with the continuing resolution. The market got a little bit concerned with that. And I think the market's response to that continuing resolution is a shot across the bow that when you actually go to implement these policies, it can create volatility. I actually think a lot of clients are holding trades like, let's say, long dollar, long U.S. equities. And as we get closer to that January 20th, it wouldn't surprise me to see some of that risk kind of trimmed a little bit as the uncertainty or / the reality of policy implementation really hits them in the face.
Is there anything that concerns you in terms of valuation here? I'm just not sure how to get comfortable with valuation. Maybe I can pull out the Mag 7 and get a little bit more comfortable there. I mean, what are you guys doing on your desk? What are your clients thinking about?
Valuation, we think of that as potential energy. So yeah, there is a risk you can sell off from a high valuation point, but you need a catalyst to do it.
Yep.
The other thing about valuation is unless you have a holding period of 24 months or beyond, valuation probably shouldn't be your number one consideration.
Right. Yep.
So I would say right here, if you get the earnings growth that the market's forecasting, the valuation is going to be fine. If you start to get earnings growth decelerated, the unemployment rate rising, all of a sudden now you're selling off from a much higher level. Yep. So I think it's a risk-reward discussion. Right. So we're very aware of it, but we're kind of looking for what could activate that risk.
Stuart, thank you so much for coming in. I love your segments on industry. I just think they're really, really great when they show you on the trading floor, keeping the young Turks calm. Mr. Kaiser is with Citigroup.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We're going to spend some time here on the politics of the moment. There's no one better to do that with than Gautam Mukunda. Yes, a professor at Yale School of Management, but far more his book, Picking Presidents, really alludes to the follow-up, I'm kidding, in jest, Picking Billionaires. Gautam Mukunda now on Elon Musk into 2025. Professor, thank you so much for joining. And one of your side notes, you say the tension within the Trump administration of Secretary of State Rubio and the newly minted Elbridge Colby versus business types that need to do business in Shanghai like Musk is tangible. Is that what we need to look forward to as a raging Chinese debate at 1600 Pennsylvania Avenue?
It's hard to see how that won't happen. I mean, the big chunk of the Trump administration is people who have defined their foreign policy stance around conflict with China, hopefully not armed, but still levels of hostility that are just a new part of the relationship. And some of the major players in the Trump administration, Elon Musk in particular, more than anyone else, are enormously dependent on trade with China. Musk wants to put billions of dollars of investment into China, and most of Tesla's profits seem to come from China. It's hard to see how those two won't be at loggerheads.
What do you think? How do you think this is going to play out here? I mean, I think a lot of folks in Washington, D.C., a lot of folks who think about policy matters for this incoming administration are trying to figure out what role Elon Musk is going to play and for how long. Do you have any insight into that?
So this is something new in American politics. There has never been a civilian as powerful as Elon Musk. In American history, it's hard to find anyone in sort of like British history or anyone who's comparable. If we go through, he's not just the wealthiest person in the world and maybe the single most important media figure. He's also America's single most irreplaceable defense contractor. Right? You could swap out Boeing for Lockheed Martin. You couldn't swap out SpaceX for anyone. So that level of stature is just astonishing and hard to, I mean, he would be a major player in any government. But at the same time, he's sort of shown a willingness to kind of conduct his own foreign policy. He appears to speak with Vladimir Putin on a regular basis and then turns around and kind of tweets out stuff that looks a lot like Russian propaganda. He has enormous financial interests in China that they may be larger financial interests in China than those of any other person in the United States.
Yep.
And so at the same time, if you're Marco Rubio or Bridge Colby, I mean, what you've been talking about for 10 years is we need to prepare against China. And I'll just note right now in the sort of the conflict over the government shutdown, the most interesting thing that happened was the initial bill was killed because of Musk. The bill that finally passed did not address any of Musk's concerns with the original bill. If anything, it was worse by his standards, by the ways he was measuring it. But the big change was it stripped out the clause that prevented Americans from making significant investments in China and sort of advanced Chinese manufacturing. That was gone. And somehow the bill passed the second time, which suggests that maybe Musk got exactly what he wanted.
So what are some of the takeaways from that funding bill practice that we saw a week or so ago? It seems like maybe Congress, in particular the Senate, kind of trying to assert its independence of its branch of government. Does that suggest how maybe these first 100 days will go for the Trump administration?
It does. And I think what it suggests is that senators and congressmen are realizing that however much Americans might admire Elon Musk's business success, they didn't elect him to run the country. And, no matter how there's been some focus groups where even hardcore Trump supporters are sort of looking at Musk's role and going, we did not vote for this guy. So it's not clear what's going on here. But what I would draw back on is I think American politics look more like court politics right now than they do traditional politics. I keep drawing on sort of stuff from the Roman Empire and the Byzantine Empire, because this is about clashes of personalities. So the person who springs to mind for me for Elon Musk is Crassus, the richest of all the Romans, the figure who was in the first triumvirate with Pompey and Caesar. I mean, he was a crucial figure in the transition of the Roman Republic to the Roman Empire. And Crassus he bankrolled other people and he played an enormous role behind the scenes. He was incredibly powerful until he decided that he wanted to rule himself directly. And while he had incredible financial skills and incredible sort of backroom maneuvering skills, that was not his skill set. He was not a successful role. He was not a successful politician. And it ended very badly for Crassus.
Professor, we're weaned on, you get this in history. March 2nd, 1861, Lincoln's first inauguration. And I'm sure they had a whole frenzy about pecking order, about who would sit where and all that. Where should Elon Musk sit at the second inauguration of Donald Trump? I
mean, judging by his level of influence, he should be right up on stage.
Holding the Bible?
Right. But I mean, with his hand right on Trump's shoulder as the
no, but come on, it's going to be seriously. Is he on stage? Does he sit 2 rows behind President Biden? Is he out in the cheap seats? Halfway back to the Lincoln Memorial. Which is it?
So here's the thing: I would never underestimate Musk's savvy. Right? He spent $250 million to make himself the second most powerful person in the United States. So if I were giving Musk advice, I would tell him he should be so far away the cameras can't find him on Zoom. That was a smart play for him, is to be as slow as possible, and the Trump people should think the same thing. But I wonder, Musk, like Trump, likes to be the main character, and it's a little hard for me to imagine him yielding focus to quite that extent.
Professor, thank you so much. Gautam Mukunda has been a huge advantage for Bloomberg Surveillance this year. We greatly appreciate his efforts. Readable and Advanced. Picking Presidents is the book. Really quite something as well.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Your daily look at the front page is the Christmas Eve edition. It's brought to you by IBKR, Financial Advisor Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests at ibkr.com/RIA. IBKR, thank you for your many gifts to us this year. Put the Kirkland eggnog down. Please, what do you got?
I got it. We'll start with the Financial Times. So they're saying, this is interesting, chief executives, publicly traded U.S. companies, they're leaving in record numbers. This is despite different pay bonuses that they're getting. The reason why they have this fear of turmoil in 2025, they're looking ahead to the next year. This is according to Challenger Gray. So here are the numbers. So in the year to November, 327 chief executives at U.S. public companies announced that they were leaving. And if you compare that to 312 that left in 2019. They say a big part of it, you've heard about it, right? The blue chip companies, Boeing, Nike, the leaders at Intel, they stepped down this year, sinking share prices, one of the reasons. But another concern they say they have is President-elect Donald Trump's tariffs. So you have the CEOs overseeing global supply chains. They are thinking of retiring, considering it, because they just don't want to deal with the headache of it all.
Plus, I also think it's probably the fact that we've had 2 monster years in the stock market
Sure.
where their stock holdings, their personal stock holdings, are probably at all-time highs, and they're like, I'm done.
Yeah.
You know, what do I want to deal with this stuff anymore? My stock is just worth $1 gajillion. I'm going to just step aside and go down to Boca. You know?
I love the phrase we heard yesterday, going back to Harvey Schwartz, where they talked about pro-tail.
Yes.
Which is professional retail.
Yep.
Pro-tail.
Exactly.
There it is. What do you got next?
The next is about Apple, that they could be mean some big money for Apple. This is from Wedbush. You know, Dan Ives, yes, estimates 300 million iPhones are over 4 years old. So that means it could lead to record upgrades. So more people are going to need the new one, and that's going to help push Apple to a $4 trillion market cap by early 2025. He also told clients they're headed for a strong holiday season because all those hundreds of millions of people worldwide, they're going to need to upgrade to those AI capabilities that the iPhones are coming with. And also big key sales in the China market, which he says is the key to all of that.
Has anybody here used AI capabilities? I wouldn't know it if it was looking at me.
It pops up on your Google search now.
Is that an AI
before you
capability?
kind of get to like the generic Wikipedia answer to whatever you're querying, it'll pop up there. So they're force feeding you it, and it's helpful. I mean, it's helpful, but I'm not fully engaging with it. That's going to be something that's going to take time. But I'm looking at, Apple's got a market cap of $3.86 billion right now. So just a whisper away from $4 trillion. Yeah, 3.86 trillion market cap, close to $4 trillion.
I just Googled American Air grounded, and I got no AI from
You got no AI.
It didn't have anything on that. See?
AI still working on that.
Very AI this morning. Next.
Good point. Okay. Are you ready for football on Christmas with Netflix?
This is a
what could
huge
go
deal.
wrong, right?
Well, it went wrong a couple days ago. Somebody had out. It was not successful.
It's not. Okay, so hopefully you have the Netflix subscription. Stan will bring that for you. 2 NFL games, right? You got the Chiefs and the Steelers, 1 p.m. Eastern. Ravens at the Texans, 4:30 p.m. You can, though, watch it free over-the-air TV and the home markets for the teams. So just want to put that out there. But 2 questions. Is it okay to watch 7 hours of football on TV on Christmas? And the second one, you had the glitches when you had that Jake Paul, Mike Tyson fight. Football fans are just not as forgiving. So we'll see if that can stand up to the test there. And then you have the debate, too, because it's kind of taking the spotlight off the NBA, which is really, had their whole Christmas thing.
Summary,
So
really
there's that debate, too. And then the players, now they got to play 4 teams. They're going to play 3 games in 11 days, so that means they're playing more.
Really,
injuries
3 games in 11 days.
So
yeah, and this is the biggest thing for Netflix here is from a technical perspective, no glitches. The bar is super high on the NFL. You can. It's one thing to do, like a tennis match or something, and it doesn't really work, or there's, technical problems. But you cannot do that with the NFL. So this is a big deal.
Let's be optimistic. It succeeds. What's Paul Sweeney's timeline where CBS loses football?
You know what's going to happen? The NFL, there's nobody better in the world at this. They're going to have their product on every single distribution platform out there. Traditional broadcast networks, cable networks, streaming, multiple streamings. They're going to, because why? Then you get more and more people bidding on the rights for your product. And it's up to CBS whether you want to put it on the CBS network or Paramount, the Streaming Plus, whatever it is. Nobody is better than the NFL in maximizing the value of their game. So we'll have to see. It's good.
Yeah. Squeeze one more in here.
Okay, one more. This is the big social media debate. It's called Gentle parenting, okay? This is hashtag gentle.
killing me.
I knew you're going to love this. Okay, so there's 4 rules. Empathy, understanding, respect, and boundaries, okay? You have to talk about feelings, when they're having a tantrum. You got to get down to their level, make eye contact, validate their concerns, say, it's okay, I understand, okay? If they hit another kid, you say, don't hit, you say, use gentle hands, okay? That's the wording now. And you're not supposed to count to 3. Remember that used to be the thing, like, I'm going to count to 3. I did that, I got to say.
Okay, Miss Mateo, is this working?
I haven't done it. I haven't done the gentle parenting.
I know that Lisa rules her house like with an iron fist. I just know that's the case.
If you talk about tantrums in the kitchen, when I hear this stuff, Russ, you got news here on
American Airlines nationwide ground stop cancel, FAA says. So, good news for everybody out there.
Good news. They think they got it fixed.
Okay, good. Yeah. So
when you have the crying kid in the airline,
yes.
How do you handle that with the gentle parenting?
Well, I've flown back, coast to coast for 20 years with little kids, so I have empathy for those parents. I try to be the empathetic. But
that's
but then at some point I turn around, and I'm like, Mom, Dad, get a hold of your kid here. I mean, you're in charge. You're the boss.
When I hear it,
have this
I feel sad for it. I just really. You had all the right phrases, Lisa, of what this thing is.
Yeah, and you know what it is? They're saying it's bigger now because now the adults are starting to be more aware of their mental health, so now they're passing that down onto their kids. I mean, it wasn't a thing when my kids were younger. There was no such thing as gentle parenting.
If you don't,
the next generation,
go to bed in the next 15 minutes, you don't get a sippy cup. Santa's not showing up, and I'm going to play Andy Williams for the entire Christmas day. Stay with us on this Christmas Eve. Paul Sweeney, Tom Keene, Michael Barr, and Lisa Mateo with Eggnog.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.